The well-known blockchain trilemma posits that achieving scalability, security, and decentralization simultaneously is a challenge for any blockchain. It's akin to the holy grail in the realm of cryptocurrencies, and numerous projects have attempted to address it. However, it appears that Algorand might be the first to successfully navigate this trilemma. On the flip side, Algorand has faced significant criticism for its aggressive token unlock schedule, while some argue is suppressing the token's price. With 80% of their tokens now unlocked, the question arises, is it the right time to buy ALGO? We've gathered various arguments both in favor and against investing in ALGO to provide a comprehensive understanding of the project before reaching a final decision. Now let's further explore the myriad reasons that make Algorand an enticing investment opportunity. Delving into the technical landscape, Algorand's standout feature lies in its exceptional technical capabilities. Designed for unparalleled speed, network can process up to 6,000 transactions per second, surpassing the transaction throughput of major players like Visa, which typically hovers around 1,700 transactions per second. The implementation of instant finality in transaction not only enhances network throughput but also sets Algorand apart. Furthermore, ongoing efforts on pipelining aim to elevate a throughput to staggering 50,000 transactions per second. Beyond speed, Algorand's superior proof-of-stake consensus mechanism contributes to its position as one of the blockchain networks with the lowest transaction fees in the crypto space. With a standard transaction cost of merely 0.001 ALGO, users can execute payments for a fraction of a penny, showcasing a cost efficiency that is 200,000 times cheaper than Ethereum's equivalent, which charges at least 20 cents for a similar transfer. Turning to the critical aspect of security, Algorand has built a robust foundation. The random selection of process for validators adds an element of unpredictability, significantly raising the bar for collusions and network attacks. In terms of decentralization, Algorand adopts an open approach to block creation, allowing any token holder to actively contribute to securing the network. This stands in contrast to other blockchains that necessitate token locking and staking for participation, emphasizing accessibility for participants to freely join or leave. The introduction of stake proofs, cryptographic summaries of recent transactions digitally signed by the Algorand network, not only enhances decentralization but also fortifies security. These state proofs play a pivotal role in securing cross-chain bridges, addressing concerns related to security breaches and exploits in the decentralized finance space, which has witnessed over $2 billion in losses. Stepping back to examine the broader industry challenges, Algorand has positioned itself as one of few projects that successfully navigate the blockchain trilemma, balancing security, scalability, and decentralization. However, a crucial aspect contributing to the project's success lies in the strength of its team. Led by founder Silvio Micali, a distinguished MIT professor and Turing Award winner, the Algorand team has assembled a world-class group of computer scientists and researchers under the umbrella of the Algorand Foundation. The project's credibility receives further validation through substantial interest from institutional investors, including Valkyrie and Arrington Capital, launching an ALGO trust and committing a $100 million growth fund, respectively. Moving beyond the team and institutional support, Algorand's commitment to an environmentally friendly strategy is a standout feature. In contrast to the energy-intensive proof-of-work mining associated with Bitcoin, Algorand operates with minimal energy requirements at scale, aligning seamlessly with environmentally, socially, and governance or ESG principles. The strategic emphasis on ESG friendliness positions Algorand to attract the attention of governments, central banks, and institutions with ESG mandates. The potential influx of substantial capital, reaching into the billions of dollars, forms an enticing prospect for the project's future growth. While these factors paint a positive picture for Algorand, it remains crucial for prospective investors to exercise due diligence and consider potential drawbacks and challenges associated with the platform before making investment decisions. Now, let's delve into the reason why one might hesitate to invest in Algorand. One of the most issues that looms large is the classification of ALGO by the U.S. Securities and Exchange Commission or SEC as an unregistered security. The SEC's legal actions in June that target major cryptocurrency exchanges, including Binance and Coinbase, and in naming several coins, including ALGO, as unregistered securities, raised significant uncertainties for the Algorand ecosystem. While the Algorand Foundation escaped direct legal action, the lingering specter of this regulatory scrutiny could persist for an extended period, potentially stretching into years. This legal uncertainty, stemming from the SEC's actions, has already left an indelible impact on the ALGO's performance, with notable dip observed, bringing the token close to its all-time low. A subsequent concern revolves around Algorand's Tokenomics, which, despite its impressive maximum supply of 10 billion coins, has faced criticism for token dumping practices by the Algorand team. During the bullish market conditions of 2021, ALGO struggled to surpass its initial ICO price, primarily attributed to the foundation significantly increasing token circulating supply by over 5 times. Although certain actions had been taken in the past, potential worries linger regarding the vesting cliffs in Algorand's token release structure, which could continue to pose challenges in the future. The release of a substantial portion of ALGO's supply, 7.5% into circulation within a single month, has been identified as a contributing factor to recent price decreases. Furthermore, the discretionary power retained by the Algorand Foundation to release more tokens into circulation adds an additional layer of uncertainty, potentially influencing the perceived low inflation rate. Moving beyond tokenomics, on-chain challenges have also surfaced for Algorand, reflected in a relatively low monthly revenue of less than $5,000. This figure is particularly concerning when juxtaposed against Algorand's multi-billion-dollar market cap. The decision of ALGO-Fi, Algorand's leading decentralized finance or DeFi protocol, to shut down underscores intrinsic challenges with the platform's ecosystem. Even high-profile partnerships, including the collaboration with FIFA, have fallen short in translating excitement into substantial adoption metrics, painting a nuanced picture of Algorand's adoption landscape. In a fundamental evaluation, Algorand's decentralization model comes under scrutiny, specifically concerning its nodes. The 3 types of nodes, participation, relay, and index nodes, each face their set of challenges. Relay nodes, acting as the backbone of the network, grapple with escalating operational costs, potentially compromising accessibility and fostering centralization concerns. Validator nodes, critical for ensuring network security, demand substantial computational power, further contributing to potential centralization risk. While the Algorand team is actively acknowledging these challenges and seeking solutions, the persistence of issues related to node centralization suggests that Algorand may not have entirely surmounted the complex nuances of the blockchain trilemma. In essence, while Algorand presents itself a notable strength, it is imperative for potential investors to navigate through the nuanced landscape of regulatory uncertainties, tokenomics intricacies, on-chain challenges, and decentralization concerns before making informed investment decisions. In our assessment of Algorand, we find arguments against investing more convincing. Personally, we lean towards the decision not to buy, primarily due to the intense competition prevalent in the Layer 1 blockchain space.